Welcome back, folks. In this video, I want to talk about market structure and using the higher time frames to gauge bias. Okay, there's a lot of questions on how to identify bias. So in my view, it's quite straightforward. Okay, I don't use anything less than a 4-hourly chart to identify bias. Okay, so for example, if we get a market structure break on an hourly chart, I will not consider that as a break in market structure. Okay, for me, it must be on the 4-hourly time frame or above. Okay, and that really makes it easy for you to identify the directional bias. Okay, so I'm going to jump down to a 4-hourly time frame. It also keeps you in check. You're not having to, it keeps you away from that fear of missing out on the opportunity. Okay, so here is a 4-hourly chart. Okay, now let me just get rid of all these lines so we've got a nice clean chart to work with. Now here is the swing low. Okay, look at this swing low. This is a swing low that created the highest point on this chart. Now you can see in last night's trading we have a engulfment of that bullish candle, right? That is a bearish order block. We've now engulfed, and that means we now have a change in the state of delivery. Okay, on a high time frame like the 4-hourly chart that we're looking at. Okay, we actually have displacement. We've got two down candles, nice big move down candles that close below this swing low and below this up candle, which is a bearish order block. Okay, closing below this swing low on this 4-hourly chart is a break in market structure. If this was on an hourly chart, it wouldn't be that important to me. Okay, so 4-hourly or daily or weekly is very important. I therefore classify that as a break in market structure. Immediately my bias is to the downside on this chart. Okay, now you don't have to get the best short entries at these highs. You can wait for displacement, wait for the fair value gap to be formed. Okay, and then you can mark it out. There is a fair value gap right there on a 4-hourly chart. Now we're simply waiting for that pullback into that fair value gap on this 4-hourly chart, right? Okay, I had to pause the video. I had to manage my trade and just watch it to exit, which I've now just journaled, so you can go and look at that on the Twitter profile. I had a long this morning in Asia that I was targeting into this fair value gap. Okay, I have journaled that. That's just here now. Okay, that's a trade there. I'll talk about this in a separate video. As I was saying, it makes it easy when you're looking at a 4-hourly chart to determine your bias. Okay, when you wait for the setup. Now, as I said, we've had displacement after this engulfment candle to the downside, and it's left some fair value gap, which we've now just come into. Okay, that's all you need to wait for in terms of understanding bias. Okay, and then identifying a key PD array for the market to come back into. Okay, such as a fair value gap or any type of bearish signature where you can expect repricing lower. Okay, now that's as easy as it is. You don't have to wait for the best entry and wait for liquidity in a session in news, for example, to be taken for your entries. You can wait for the move to set up. You can wait for a confirmed displacement on a high time frame to determine where market structure has changed and now we might be headed in a different direction based on what you see in the charts, and then you're waiting for confirmation or a good entry into a fair value gap or any other type of bearish signature. Okay, so if I go back now to a different date on the chart, this is another example where the market reached key highs and we had a displacement. Okay, this is a nice 3-bar reversal pattern on a 4-hourly chart. So you're going to have different signatures, right? So here we have bearish order block, we have a swing low bearish breaker, and displacement, okay, with gaps. Okay, here we got a 3-bar reversal pattern. Again, same concept. You do have swing lows here, okay, that we've closed below. Okay, you got your order blocks here, okay, your swing low here, your bearish breakers here, fair value gap as well, and you're waiting for movement back up into the fair value gap. Then a lower time frame, you're looking for your confirmation signatures, your bearish signatures on a lower time frame. Okay, if you're assessing the market on a 4-hourly time frame, then your lower time frame will be a 15-minute chart. Okay, 15-minute time frame. Okay, so we can continue. There were additional shorts, again, 4-hourly chart. So this is going back on the 17th of July. I've taken all these trades, they're all journaled, and I've created videos on each separate one of these trades. Okay, so again, we have the same repeating pattern. Swing low. Okay, you got the displacement candle closing below the swing low. You got gap right here. You got your bearish order box, bearish breaker, and then the market, you're waiting for that market to retrace back into the fair value gap, or the bearish order block, or the bearish breaker. Okay, again, this is a swing that created the highest point on the chart. Okay, so displacement with a fair value gap, bearish order box, bearish breaker, and then close below the swing low, then you're waiting for moving back up into your key PD arrays. Okay, so there's some very easy examples. Go back and look at this on your charts. Okay, this is on the 4-hourly chart. And that's all you need to wait for. Okay, on a 4-hourly chart, you've got plenty of time to see this form and plenty of time to wait for the pullback into the key PD array for where you might expect repricing lower from. Okay, so this is the most recent one. Okay, same exact pattern. We've got swing low, displacement, close below the swing low, back up into your bearish order block or into a fair value gap or into the bearish breaker, right? The last down candle in that swing low. Okay, this is the swing that made these highs. Okay, so these patterns repeat. Okay, on a 4-hourly chart, it makes it easier to identify. You've got plenty of time. You're not rushing. Okay, and you can do that without having to be in front of the markets live when there's volatility. Okay, so you don't have to be trading live at the times where volatility is high, where risk is elevated because of news announcements. Wait for the setup to form on a higher time frame. It's higher probability. You can manage your risk. Okay, but you got to learn these setups. So I invite you to go and study the charts, learn what I've mentioned in this video. Go back and study the charts. Look at these examples that I have talked about in this video. Okay, this one's from last night. Okay, this one here is from the last week of August. Okay, nice down candle through this swing low, right, closure below the swing low. That's what I consider on a 4-hourly chart to be a breaking structure. Then you're looking for where are your bearish order blocks or bearish fair value gaps or bearish breakers, okay, and waiting for the market to retrace back into them. Okay, this one here is from 17th of July. Okay, nice displacement close on the swing low, you got bearish order blocks, bearish breaker, and you're pulling back into the key PDRAs for repricing lower. Okay, so I hope that video is useful. I'll talk more about this trade that I've done this morning, this long trade that I've done this morning in a separate video. I will now talk with you in a future video.